Every fall, we're inundated by Medicare Advantage commercials promising zero premiums, free dental, and even gym memberships. It sounds good, but as someone who has spent years helping people navigate Medicare, I can tell you that what looks simple and free on the surface can be one of the most expensive mistakes over time. In this video, I'm going to show you how to build a Medicare plan that protects you from all directions, from the painful premium increases that can come with traditional Medicare Supplement plans, and from the dangerous benefit reductions that we're seeing now in Medicare Advantage plans. By the end of this video, you'll know exactly how to design the best long-term Medicare coverage, one that keeps your costs low, your benefits stable, and your health care fully under your control. Hi, if we haven't met yet, I'm Matthew Clausen, CEO of MedigapSeminars Insurance Agency. We are one of the nation's premier independent Medicare insurance agencies, and our services are free to you, the consumer. Our goal is to help you make an informed decision about your Medicare, not just for this year, but for all the changes that we will be seeing in the years ahead. If you find this video helpful, please click the like button, subscribe to the channel, and hit the bell icon so that you don't miss future updates. Now let's get started. Medicare Advantage, also known as Medicare Part C, is Medicare managed by insurance companies, most of whom answer to shareholders. When you enroll in an Advantage plan, you are replacing original Medicare with an insurance company's version of Medicare. The appeal is obvious. Many Advantage plans have very low premiums, but they include extras such as dental, vision, hearing, or even gym memberships. However, these plans also come with some important limits. For example, the insurance company controls your healthcare decisions, not your doctor. They can require prior authorizations from your doctor before you receive most non-urgent medical treatments, and they can even deny coverage that Medicare itself would have approved. You must also restrict your care to being within the plan's network of doctors and hospitals. Keep in mind, networks can change at any time. When you travel, your coverage outside your area is usually limited to urgent care or emergency services only, and international coverage is extremely rare. Every Advantage plan has a maximum out-of-pocket limit known as a MOOP. Medicare sets the annual maximum out-of-pocket limit for consumers each year, and this amount can change and does change with inflation. A Medicare Advantage plan can choose to have a lower maximum out-of-pocket for the policyholder, but it can be no more than what is set annually by Medicare. In 2015, the Medicare Advantage maximum limit was $6,700. In 2025, the maximum is $9,350 for in-network care, and up to $14,000 if you use both in and out-of-network doctors. That's a 75% increase in just 10 years. While Advantage plans may look inexpensive today, you can expect them to grow more costly over time. The out-of-pocket limits of a Medicare Advantage plan increase faster than the Consumer Price Index measure of inflation. That's important. We'll get more to that in a minute. And the extra benefits that attracted you in the first place to a Medicare Advantage plan, like the dental or gym memberships, can shrink every year or disappear altogether. Now, let's look at the other side, the Medicare Supplement plans. Medicare Supplement plans keep original Medicare as your primary care. That means that you can see any doctor or hospital in the United States or its territories that accepts Medicare. Your care can never be delayed or denied by an insurance company. Most importantly, you make the medical decisions with your doctor without insurance company intervention. As many have experienced in recent years, one of the downsides of a Medicare Supplement plan can be the high annual premium increases. It can be very frustrating during your retirement to watch your Medicare supplement premiums increase to a rate that is uncomfortably high and has a negative impact on your retirement budget. And this is where the Medicare Supplement Plan G, High Deductible, and the Innovative Plan G join our conversation. Both the Medicare Supplement Plan G, High Deductible, and the Innovative Plan G offer the same coverage as a regular Plan G. However, there is a deductible that you must pay before the supplement pays any benefits. Because you have a deductible that must be paid before your supplement pays benefits, these Medicare supplement plans can be purchased for significantly less than a regular Plan G. The high deductible part simply means that you're responsible for the cost share of your Medicare approved costs each year before your supplement starts paying. In 2025, that deductible is $2,870. And once you reach that amount, the plan pays 100% of everything Medicare approves for inpatient and outpatient services for the rest of the calendar year. Please understand, this deductible is not a Medicare deductible. It's a deductible for your supplement. Medicare still pays its portion of the bill. For example, if you see a doctor on an outpatient basis, Medicare still pays 80%. You'll pay 20% until you meet the annual Medicare supplement deductible. Then you have to pay 100% coverage for the rest of the year. If you end up in the hospital, you'll pay the Medicare's Part A deductible, which is $1,676 for 2025, plus 20% of any doctor visits or physician services. Then, when the cost of all of your medical services, all of your out-of-pocket costs reach $2,870, your supplement and Medicare will pay the rest. So the easiest way to understand the deductible feature of these plans is to simply consider the deductible as your annual maximum out-of-pocket limit. You have original Medicare, Part A and Part B as your insurance with a set maximum out-of-pocket equal to your deductible. If your deductible is $2,870, then once you have met that amount of personal out-of-pocket Medicare expenditures, your Medicare inpatient and outpatient expenses are covered at 100% for the rest of the year. Because the Medigap deductible is linked to the Consumer Price Index, it will increase each year at the same rate as the CPIU. So here's the good part. It increases only with general inflation, not with rising medical costs. The Medicare Supplement Plan GHD maximum out-of-pocket has increased at a rate that is significantly less than the maximum out-of-pocket of an Advantage plan. Over the past decade, the deductible has risen about 34%, so that's 34% over 10 years. Meanwhile, the Advantage plan maximum out-of-pocket has increased at a much faster rate. I noted earlier it's increased by 75% over the same time frame. So the Medicare Supplement Plan G High Deductible Plan typically costs about half, or actually less than half as a standard Plan G, and it depends on your state. Yet it still gives you nationwide freedom of choice and the same 100% coverage once the deductible is met. And because healthier people tend to choose this plan, the premium rate historically has had lower price increases over time. But even if the percentage increase in monthly premiums were the same as a regular Plan G, it's on a much smaller premium. So think about it. A 10% rate increase on $50, if your $50 premium, is a third of a 10% rate increase on a $150 premium. Plus, you have a maximum out-of-pocket limit that is a fraction of what you would be liable for using most Medicare Advantage plans. So, a caveat is just like with an Advantage plan, the deductible resets every January 1. And if you have a major illness that crosses from December into January, you could end up meeting that deductible twice. Otherwise, your costs with the high deductible plan are predictable, and limited and tied to inflation as measured by the Consumer Price Index. This simple chart shows how much faster the Advantage plan's risk has grown compared to the Medicare Supplement Plan G high deductible. One is designed to rise with inflation, the other rises with increased healthcare costs. That's a big difference over time. So here's how you can maximize your health insurance coverage while minimizing your costs. You start with a Plan G high deductible as your foundation. It gives you the freedom of original Medicare and limits your annual risk to about $2,870 for 2025. Then add 2 small, inexpensive policies that close almost every gap. So first, you get a cancer protection plan. Now, this policy pays you a lump sum tax-free benefit at the first diagnosis of cancer. I personally carry a $50,000 cancer protection coverage because I know that if cancer strikes, the biggest challenges are often the travel costs, the having to get a caregiver, and for those of us who are still working, the time away from work. So it's not just hospital bills. That extra protection removes the financial stress so that you can focus on getting well and not worry about the cost of your care. Second, a hospital indemnity plan. Now, this plan also pays you a tax-free lump sum of cash directly, in this case for every day that you're hospitalized. You can use that money any way you need to cover the deductibles, to hire help at home, any way you need. So together, these 2 low-cost policies can offset the deductible and keep your out-of-pocket expenses close to zero, even in a bad year. Combined, this insurance package gives you a maximum insurance coverage at a minimum cost, and the premium increases are historically much smaller than with a standard Medicare Supplement plan. Now, if you like the logic of the high deductible plan, but prefer a plan that automatically grows with you, I believe that you should consider the Innovative Plan G. The Innovative Plan G can include a preventive care rider that reimburses you for preventive services that original Medicare doesn't even cover. And this could be a full physical, some routine checkups, extra preventive screenings, any preventive care. During the first 2 years, you can also move up to a higher benefit plan without medical underwriting. So this gives you the flexibility if soon after you've gotten the plan, your health changes and you want higher coverage. Then on your 3rd policy, January 1, the plan automatically converts to a regular Plan G without any increase in premium. When it does that, for the rest of the time that you have that policy, the Innovative Plan G, you have a regular Medicare Supplement Plan G, but are paying the lower premium, which is often less than that of a Plan N. That means you keep the same affordable rate while eliminating the deductible altogether. It's an elegant option for people who like the savings of a Medicare Supplement Plan G high deductible but want built-in preventive benefits and a smooth path to full coverage over time. If your goal is comprehensive Medicare coverage, predictable costs, and protection from rising prices or shrinking benefits, the combination of the Medicare Supplement Plan G high deductible, a cancer protection plan, and a hospital indemnity plan is one of the smartest strategies available. It gives you freedom, gives you stability, it gives you peace of mind, it gives you everything that Medicare should provide. If this video helped you understand how to maximize your Medicare coverage, please click the like and subscribe button and leave a comment below. Tell me what part of this strategy makes the most sense to you. And if you'd like personalized help designing your own Medicare plan, visit medigapseminars.org or use the Contact Us link below to reach out to us. We'll walk you through your options and help you find the coverage that fits your needs and your budget. I'm Matthew Clausen with Medicap Seminars Insurance Agency. Thank you for watching.